What if I told you that right now, quietly, certain postcodes across the UK are sitting on the edge of an explosion, and most people have absolutely no idea? Not the big investors, not the hedge funds. Everyday people are watching property prices climb in cities they've never even considered, while they're still waiting for the perfect moment to buy in London. And by the time they realize what happened, it'll be too late. Stay with me, because in the next few minutes, I'm going to show you exactly which UK cities are about to blow up in value, why the data is pointing to serious price growth right now, and how smart investors are already quietly positioning themselves ahead of the crowd. This is the video you need to watch before making any real estate decision in 2025. Don't skip a second of it. Welcome to NestPath UK, where we cut through the noise and give you the real picture on property investment in Britain. Let's start with something that most people completely misunderstand about the UK housing market. When people think about UK real estate, they automatically think London. That's it, just London. And look, London is incredible. It's a world-class city. But here's the thing that the smart money already knows. London's best days of explosive growth are actually behind it, at least for now. The real action, the kind of growth that builds genuine wealth, is happening somewhere else entirely. The UK property market right now is in a fascinating moment. Interest rates, after years of being historically low, spiked dramatically, and that shook a lot of buyers out of the market. But here's what nobody talks about. That shakeout created a gap, a window, and that window is already starting to close. Because demand never actually went away. The UK still has a chronic structural housing shortage. There simply are not enough homes being built to match the population. And when you combine a shortage of supply with a returning wave of buyers who've been sitting on the sidelines, saving, waiting, you get one thing: rapid price growth. And the cities that are going to feel that growth first, they're not the ones you'd expect. Let me take you to Manchester first. And before you say, "Oh, Manchester, I've heard that before," just hear me out, because what's happening in Manchester right now is different from the generic hype you've seen before. Manchester is not just growing, it's transforming at a structural level. The city has become a genuine tech and financial services hub. Major global companies, from KPMG to Amazon to BBC, have either moved significant operations there or expanded massively. And what follows big employers? People. And what follows people? Housing demand. The average property price in Manchester is still roughly a third of what you'd pay in London for comparable square footage. A third. That gap does not make sense economically, and markets always, eventually, correct that kind of imbalance. The Northern Powerhouse Initiative has poured billions into Manchester's infrastructure, and the results are becoming impossible to ignore. But here's the part most investors miss. It's not central Manchester where the best returns are hiding. It's the surrounding commuter zones. Places like Salford, Stockport, and Stretford are seeing demand surge from professionals who want city centre salaries but more living space for their money. If you're looking at Manchester and only looking at the M1 postcode, you're already thinking too small. Now, stay with me, because I want to talk about a city that I genuinely believe is the single most underrated real estate opportunity in the entire country right now. And that city is Birmingham. Birmingham had its moment in the spotlight during the Commonwealth Games in 2022. For 2 weeks, the whole world was watching. And then, people moved on. But the investment didn't. In fact, it accelerated. The city has spent the last decade fundamentally rebuilding itself. The Bull Ring, HSBC's UK headquarters moving there, the development of Curzon Street. This is not small stuff. Birmingham is becoming a genuinely world-class city, and property prices have not fully caught up yet. Here's a number that should stop you in your tracks. Birmingham's population is projected to grow by over 150,000 people in the next decade. That is the equivalent of a medium-sized British town appearing inside the city's boundaries in 10 years. Where are those people going to live? Because right now, the housing stock simply doesn't exist to accommodate them. That fundamental mismatch between supply and future demand is exactly the kind of condition that drives serious sustained price growth. And here at Nestpath UK, we always say, you don't make money when you sell, you make money when you buy. You make money by getting in before the narrative becomes obvious to everyone. Now let's talk about something different. Let's talk about the coastal markets, because there's a post-pandemic shift that has permanently reshaped where people want to live in Britain. And I think it's one of the most underappreciated stories in UK property right now. During lockdown, something happened in the British psyche. People realized that they didn't need to be in a city centre to do their jobs. Remote work normalized. And suddenly, places like Whitstable in Kent, Margate, Folkestone, Whitby, and even parts of the Welsh coastline started attracting a completely different type of buyer. Young professionals, families, creative workers, people who wanted quality of life but couldn't afford the countryside lifestyle at Cotswolds prices. Margate is a perfect example of this. 5 years ago, Margate was considered a struggling seaside town. Today, it has a genuine art scene, boutique hotels, award-winning restaurants, and a direct train line to London St Pancras in under an hour and a half. Property prices there have risen significantly, but they're still nowhere near where they'll be in 5 years if the trend continues. And the trend shows absolutely no sign of stopping. The Welsh coast tells a similar story. Places like Tenby, Aberystwyth, and the Llyn Peninsula are seeing interest from buyers who would previously have never considered Wales at all. Welsh house prices are still among the most affordable in the whole of the British Isles. But that affordability gap is closing, and it's closing fast. Let me bring in something that doesn't get discussed enough when people talk about UK property investment, and that's the rental yield picture. Because for a lot of investors, especially those building a portfolio, rental yield matters just as much as capital appreciation. And this is where cities like Liverpool, Leeds, and Nottingham become absolutely fascinating. Liverpool right now is producing some of the strongest gross rental yields in the entire country. Certain postcodes in Liverpool, particularly around the L1, L3, and L7 areas, are generating yields of 6, 7, even 8% in some cases. Those are numbers that would make a London landlord weep. And Liverpool isn't just a yield play anymore. The city's economy has genuinely diversified. Life sciences, digital media, maritime logistics. Liverpool is building a real economic base, not just relying on tourism and its famous heritage. Leeds is a similar story, but with an even stronger professional population. Leeds is the largest financial centre in the UK outside of London. It has 2 major universities pumping out graduates every year, many of whom want to stay. The build-to-rent sector has exploded in Leeds because developers know what the demand picture looks like. For investors, that means sustained rental demand and a tenant pool that is increasingly professional and higher earning. And Nottingham often gets overlooked entirely, and that's exactly why it's interesting. 2 universities, a growing tech sector, and property prices that still sit well below the national average. For a buy-to-let investor looking at long-term yield with the possibility of capital growth layered on top, Nottingham deserves serious attention. Now, I want to pause here and talk about something more strategic, because at Nestpath UK, we don't just want you to know where to look. We want you to understand how to think about this, because there's a trap that catches so many investors, and it goes like this. They hear about a hotspot, they get excited, they buy at the peak of the media coverage, and then they sit there wondering why their property isn't performing the way the article promised. The secret to real estate wealth, and I mean real generational wealth, is identifying a narrative before it becomes a headline. You want to be the person who bought in Manchester's Ancoats before every property magazine in the country was writing about it. You want to be the person who picked up a terrace in Margate before the Sunday Times ran a feature on it. By the time something is described as a hotspot in mainstream media, a significant portion of the easy gains have already been captured by the people who moved earlier. So how do you find those opportunities before the crowd? You follow the infrastructure. Every single time, throughout history, real estate values follow infrastructure investment. When a new train line is announced, buy near the stations before they open. When a major employer moves to a city, buy in the surrounding residential areas before the workers arrive. When a university announces a new campus, buy in the postcodes around it. Infrastructure is the map. Property prices are just the territory that adjusts to fit it. The UK government right now has committed to enormous infrastructure spending across the North and Midlands. High-speed rail connections, however delayed and debated, are still fundamentally reshaping the commuter geography of England. Places that were once considered too far from economic centres are moving into viable commuting distance. And that changes everything about where people can afford to live while still accessing high-paying jobs. Let's also talk about the new build versus existing property debate, because this matters enormously for investors looking at these hotspot markets. There is a significant government push to increase new home construction across the UK, with targets in the hundreds of thousands of units per year. And while these targets have historically been missed, the political pressure to actually deliver on them is stronger now than it's been in a generation. What this means for investors is nuanced. In areas where new supply is coming in significant volumes, it can put a cap on short-term price growth. But in areas where planning restrictions make new development genuinely difficult, which includes most of the southeast, many coastal areas, and significant portions of historic city centres, supply constraints remain firmly in place, and constrained supply plus growing demand is, and always will be, the most reliable formula for property price appreciation. One more thing I want to cover before we wrap up, and this is important. Financing. The mortgage market in the UK has shifted dramatically over the past couple of years. Rates came up fast, and that created affordability pain for buyers. But rates are now beginning to ease. And here's the psychological dynamic that creates opportunity. The moment rates visibly start declining, buyer confidence returns, often very quickly. The people who were sitting on the sidelines suddenly re-enter the market. And that surge of returning demand hits a market where inventory is still relatively tight. That's the moment when prices accelerate. And we may be approaching that moment right now. The investors who will look back on this period and be grateful are the ones who didn't wait for certainty. Because certainty always comes at a price. It comes in the form of higher purchase prices, lower yields, and a smaller share of the upside. Here on Nespath UK, we're watching all of this in real time. We're tracking the planning applications, the infrastructure announcements, the rental data, the demographic shifts, and we bring that analysis directly to you so that you can make decisions with your eyes open, not based on headlines written after the fact, but on ground-level intelligence gathered ahead of time. So here's what I want you to do right now. If this video opened your eyes to something, even just one city, one postcode, one investment framework you hadn't considered before, then hit the like button. Seriously, it takes less than 2 seconds and it tells us to keep making this kind of content. Drop a comment below telling me which city you're most interested in: Manchester, Birmingham, Liverpool, Leeds, Margate, or somewhere else entirely. I read every single comment and I want to know where your head is at. And if you are serious about UK property investment, and I mean actually serious, not just curious, then you cannot afford to miss what's coming on this channel. We have deep dives planned on specific postcodes, interviews with on-the-ground agents, and analysis that you won't find anywhere else. Subscribe to Nespath UK and hit that notification bell so you don't miss a single video. The UK real estate boom is not a rumor. It's not hype. The data is real, the demand is real, and the opportunity, for those who move with intelligence and timing, is very real. The only question is whether you'll be one of the people who looks back and says, "I saw that coming," or one of the people who says, "I wish I had acted sooner." The best investors I know never waited for the market to feel safe. They moved when the opportunity was clear, and right now, across these UK cities, the opportunity is becoming very clear indeed. This is Nespath UK. We'll see you in the next one.